Good day, everyone. It's been a while that we've been doing our market updates. So this time, as of today, January 31, we'll take a close look again at the status of the PSEi and the Philippine Peso. So let's start off with, of course, what happened today. Somehow the market went down by about 2.5%. After a rally that started sometime in October. And definitely, this is something relatively huge because it has put back the index to about 6,793, which is again below the 7,000 level or territory. So, if we are going to analyze the index today, definitely it is a cyclical correction because we have seen the market rising since about October, and it has gained dramatically. So it's about time that the market should take a breather to go back to its support line again and perhaps regroup, for potentially a higher highs in the near future. So if we're going to look at the status of the index today, definitely it has got back to its below the 7,000 mark. And in order for us to determine where can it possibly rest, for it to make this correction or regrouping, as I've mentioned, we are going to look at what we call the Fibonacci, retracements level, wherein starting from a low to a high, we are going to make some sort of a projection of about 38.2% correction, 50% correction, and 61.8 correction. Those are the Fibonacci retracement levels, as we normally say in technical analysis. So putting at it in the lowest possible level, about the maximum correction point is about 6,260 or about 6,300, which is a long-term or a long time support level. Initially, it could possibly target the 66 level, which is a 38.2% correction, which is this level. This one is the 50% level, which is at about 6,400, and then your next level would be about 6,300. The market is expected to be, targeting this area perhaps in the near term, as our MACD suggests, that is going to go back to its center line before possibly making a comeback again, towards breaking new highs on the upside. Okay, so the reason for the drop today is, of course, the usual jitters out of the Fed meeting that's going to happen, and wherein the market don't want to be caught with a surprise, just in case the Fed indeed would really give a surprise to its rate hike announcements, later in the day. So perhaps it was just timely for other traders to take some profits off the table, since the market has risen, dramatically from about 5,700 to about 7,100. So that's about 1,400 rise, or about close to about 25%, of increase, from its low level that started in October. Okay. So meantime, definitely there's no call for panic, because this is a normal, market retracement. And even when the market is going to go higher, definitely in the future, it's just a question of time. It's not going to be a straight line path, but it's going to be making some gyrations. So it's good to pick up some of the issues in the market, or perhaps the index at about 6465 level, would be good enough. On the other side of the counter, we have the USD peso dollar exchange rate, which is somehow an opposite of the movement of the stock market, starting from October. Okay. October, the stock market registered its low, whereas the peso registered its low also and the highest against the highest of the dollar rate and started moving down. Okay. So I believe that there is a direct or somehow a relationship, between the movement of the index as well as that of the peso dollar exchange rate. So maybe foreign investors seeing our peso to be weak at about 59, so they're getting more pesos out of their dollars and buying, the equities market at a very low level. So that gives them definitely an advantage. If we are going to analyze somehow the peso dollar exchange rate, what is the scenario at this point as prescribed by our charts? By the way, courtesy of Instagrams. You can also subscribe to Instagrams to get a chart that is going to be more visual and it will help you analyze, securities in the market. We have seen the top of the 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 peso at 59, its weakest point, the strongest point of the dollar, and sometime October. At 59, somehow the MACD, which is our favorite indicator, has formed what we call a divergence, which is I pointed out in my first uh, view about the peso dollar exchange rate. I think sometime September, and this has been one of the little things that I saw that could possibly sense that the market is actually touch. So then, of course, uh, the thing has happened. It did not break the 60 at some point. I thought it was breaking 60, but it's going to be quick. But then it never did and started going down. And right now at about 54, 50K, wherein we expect that this is going to happen more so. I mentioned, I think sometime November, that if the 56 level is going to be broken, which is your resistance, then therefore that's going to start off the decline, of the peso. More so, it has already broken also the center line on the MACD. But right now, what is happening is that the the peso seems to be putting a stop, to its appreciation against the dollar because the MACD says so. This is only one thing that we can see that the peso is going to move up again, in this range to about 56 to 57 maximum before trying to create a new path, either upwards or downwards. Definitely, if it's going to go up, it has to break 56, 57 level again, as that was the previous high that became a support and now it's the resistance again. So, but then chances are, okay, it's going to move upwards up to that level and then from that time, if it's unable to break the 56, 57 level, and it will start coming down again. Of course, your next support would be at about 54. Now, if we're going to take also the Fibonacci of the ascent of the dollar against the peso over the past 3 years, no? Coming from a low of about 47 to a high of about 59, so that's about 12 pesos. So if you're going to project a correction at 38, it's 0.54.75. At 50%, that's going to be 53.4. And at about 61%, which is the lowest potential correction of the peso at about 52 pesos, which is relatively good level to pick up some dollars again. Okay. So, but then meantime, the range is now going to be a high of about 56, 57. For now, 59 is going to be a remote possibility already, not until it breaks 57. Because the trend wise suggests that, you know, it is on a decline as expressed by our MACD, which is in the weak zone that we have not seen over the past 3 years. Okay, that is actually on the strong zone. So right now, the trend may have reversed towards the decline. So if you want to learn technical analysis, check out my upcoming seminar this February, or program, a new batch that I'm going to form this February. So for program details, go to bit.ly/TWM info to know more. Okay. So that's it for our presentation. Thank you very much. Again, for our first time viewers, you can read my articles at www.thefastexchange.com. For my past videos, you can view it at my YouTube channel, The Fast Exchange. And kindly like also my Facebook page, The Fast Exchange, for more updates, especially particularly on scams. Thank you very much and have a great day.